Talk about is the levels you need to triage the market. Matt, somehow I had the graphic behind me instead of in front of me. I mean, I guess it's more viewing pleasure. Uh, Matt Davio, a voice for radio. How you doing, Matt?
Never better, Bob. Never better.
Never better. My college roommate's father was a broadcaster in Chicago for a long time, a voice for radio. I don't want to mention it, but anyway, Matt, we got game 5 tonight, hockey.
Yeah, game 5 up 3-1. Avalanche, as you said, young legs back home. Elevation.
The Elevation Nation. I think it's going to be a pretty hard mountain to climb, no pun intended.
Yeah. Well, like I said, I really was looking for Tampa Bay to win game 4, maybe lose 5, come home, win 6, and then try to win it all back at 7. But now you got to win twice at Colorado. That's no easy task.
And
just the plane flights from Tampa Bay back and forth is enough to wipe out an old man like me and you. But that's the problem with Tampa Bay. Maybe their dynasty is ending here.
Yeah, they're a little long in the tooth, and that overtime period, like, come on. I mean, you could tell me that there was 5 men on the ice or 6 men on the ice, and there were,
yep.
But they dominated that overtime period like ridiculous.
Yep.
I think the goalie had to go into some therapy for the shots that he was facing. All right, Matt, we got a filthy show for you tonight. NBA. I like sharing your stuff, Matt.
Well, this was before the draft, right?
This was before the draft, right on.
And these were the 4 guys. I think the top 2, I don't know exactly where I know Houston ended up in Orlando. And the most interesting part of that story for me now
is this.
The Orlando Magic, with the M being the crucial, change there. There's now 5 M players on that Houston team. You got the brothers, Mo and Franz, the Germans, right?
Right.
And then you got Iggy, a Canadian, who's another just a great player. You got Houston, the new guy they just drafted, sweet shooter, and Teskey, another big old, not old, but he's probably 25 now, 7-footer. Of course, you're in the league if you're 7 feet. You can always get 10 minutes.
Did you know, Matt, that I had seen a stat that if you're over like 7 feet, you have like a 8% chance to play in the NBA.
I believe it. I mean, how many? There can't be that many 7-footers. Like when I was watching that, I was watching like a little bit of the late first round yesterday. And the whole family's at the table. They're all hugging each other and the whole thing. Every one of those guys was like monsters. Like everyone is like 6'8", the smallest dude.
I know.
And so they're all like, their moms are down here and they're hugging their son at their waist.
It's crazy. It is crazy how giant these guys are. It's ridiculous. And we talked about it in hockey too, like how they
Yeah, hockey's starting to look like a smaller ice rink too. Like when I'm on there, this place is so big, like we talked about. I'm just trying to get off the ice and rest. These guys take 2 steps and they're already down shooting, making a great play. So absolutely.
Hey, Matt, we talked to somebody recently about how it's very difficult to not be political in a show because we're not a political show, we're a trading show. But policy and politics, they're the same, right? That you don't get one without the other. One drives the other.
Right.
And so policy here around climate change and eco-friendly, and this is Europe, we shut down all the nuclear plants. We replaced nuclear energy with Russian gas, which is cleaner. Putin shuts off the gas when you anger him. We restart coal plants to cover your energy needs, and then you buy the coal from Russia. It's a circular argument of ridiculousness. Matt, let's go to the crude chart because we love talking crude.
Yeah, we talked about it early in the week after the after the Juneteenth holiday. That crude, down there at 102 was a good buy, the first dip, and we had been talking about it for months. That if you're looking for areas in this bracket to play out, 102 would be the first area we would bounce, and we literally ragged right off of it. And then from there, and this is where you can see this right here, 102.50. We were saying it went down to 101.68. So it got right, right into this meat of this profile, and it bounced because it had come down too hard, too fast. And what was the news? The only news that really mattered policy wise was Biden mentions. He didn't say, he didn't even get it done. He's going to the excise tax, which we talked about, 20 cents a gallon on $7 and on the West Coast here. Is that really going to help anybody? Nope. So guess what's happened over the rest of the week? Well, there's a bull market in stocks and in oil, Bob. It's the same thing that we've been talking about. Know your levels, pick your spots, and if you bought 102.50 and then every dip from there on the rest of the week, you've had nothing but a bullish trend in crude all week. I mean, what a great trading vehicle this has been. And we talked about it on Monday. Buy 102.50, ran up here, buy, boom, like 3 trades all week. I mean, it's right back into where it fell from. So this is where it should pause, right up in here. And that's where it paused, right up here at almost 109. But I think the next pullback and it'll go up to 110, right? So it's just trending back up. And then if 102 fails again the second time, then you can look for 92. But this is still very bullish, Bob. And I've seen it, what I've seen over the last couple of days that make me go, this is like everybody knows 20% is a bear market. Like even retail, when retail starts telling me, 20%, we're in a bear market. So we're in a bear market in oil. Well, according to Biden, this is all Putin's fault, yet it's above, where it was when Biden, started this whole thing. We were right here at about 95. So the 96, 97 level is where we were before. So nothing's changed. The same inflation is here when Biden said it's somebody else's fault. And we all know it's bump kiss. So who cares?
Who cares is right, Matt. Who cares is right.
And that's what the market said. Who cares? This is a great buying opportunity. And you don't think, well, it's just not going to go away tomorrow. Interest rates, that fell off this week, and that's why we're rallying. Everything, dropped this week. It's all cycling. And we're at the end of the month, end of the quarter, Bob. And why wouldn't they kick save it as they do every month? It's nothing new. And July 4th is on a Monday. July 1 is normally when the first Friday is next week. They're not doing jobs next Friday, so we have to wait until July 8th. So guess what? We have a long ramp of like nothing out there to really kill this market until jobs and then earnings. So that's where we are. We're in this hole, if you will, of information flow as far as economic flow. And that's going to continue to probably, lead to a levitation act over the next week or two, I would say.
Hey, Matt, speaking of policy, because we talked about this earlier about how policy ends up driving price. And the big policy that I want to spend some time on was the shutdown and what it did. And Matt, I don't know if you notice on my lapel, I have a few things here. Right here is the little Tasty Trade cherry, a little shout out to Tasty Trade. I was watching the show today and they had a guy calling and talking about Home Depot, Matt. And I got a couple things to say about Home Depot. Besides the chart, let's just talk a little bit of fundamentals. I mean, when you shut down 350 million people and everybody's sitting at home twiddling their thumbs, all of a sudden the bathroom that you didn't want to redo, all of a sudden you have to redo it, right? I mean, the demand went through the roof. And the prices are still so ridiculous. I was at Home Depot yesterday. We're doing a little project at the house. I bought a 3/4 inch sanded piece of plywood, one piece, $75 for a piece of plywood. Are you kidding me? Anyway, on the show, they were talking about an options play in Home Depot. And I wanted to talk about, let me share here. I wanted to talk about the benefit of understanding, and you can do it with the profile, but from a standard deviation modeling point of view. Again, this Home Depot, this is the monthly. And if you can see, you go back till 2012, how many times have we been in this position? And Matt, I'm going to tell you 0 times since 2012. Does it look like we're going to close the month in lower momentum, right? And we're going to have the bands fully rolled over and lower potentials being portrayed on the chart. It hasn't happened since
Well, we had the COVID push, but that was
I
it.
understand it. This was the COVID low right here that we talk about all the time. COVID low was 140.
Right.
But it didn't last. The next month they brought it, they brought it right back up because everybody was at home looking at each other like, what are we going to do? I know,
Right.
let's turn the garage into a bedroom. My point is that the standard deviation modeling helps you get a concept of the potential in the market, right? And so for me, the potential is falling away. And this month it's 228. Next month it's going to be around $200 is the potential. Just like in the dollar index, when we talked about that 2 weeks ago, and I said 105 for sure, because of that expanding potential on the chart. I mean, and so I don't know. I just wanted to point that out.
Yeah, but I would also let me give you my 2 cents, because I would actually say, because of where we are and where we are in this hole that I just suggested, we got this bullish backdrop now, right? Everybody thinks the bottom is in. I know the bottom is not in, but a bottom may be in. And it's a good time, because 265 was the low here, and now we're up 17, and we traded right to the top of that profile here today, 283.40, and that's been rejected. But once it gets over that, then that'll probably happen next week. It'll move swiftly up to 300. So I'm actually bullish Home Depot right now, as long as this low holds. And you could buy, and again, you could buy in the money calls on that. That would be a cheap way to do it. And I think the potential for a move up here to 335 is real possible. And I would love to see that happen, because this is why I brought this chart up, because this is just an 89-minute chart going back to the early 21, right? This looks to me to be the chart in control right now on this market, because we held right there and we bounced right off of it. So that's the lower end of value. It's very clear here on the histogram. And the potential is, to me, looks like 320 to 335. So guess what, Bob? That is a big move higher, and that would shake out a lot of shorts that just got short here. Just as they were buying here at 420, they were selling at 265. Wrong moves both ways, right?
Amazing how multiple systems end up coming up with the same important levels, because that 13 bar moving average that's driving the standard deviation modeling on the monthly comes in at 335 also.
Now, if you so I would love to see this 320 level come back into play. That's only $38, which is another 12-13% away. So you give me this level again, Bob. You see this is a great area that it would basically be kind of a a right shoulder for me. And then we can get ready for the next push to test this low, which is about 250. Okay, so we'll go from, let's say we get 320, 340, then we trade down to 250, maybe bounce a little bit up here to 280, kind of where we are now, and then resume back down into the meat, where eventually we will trade down to 178. To your point, the inventory is piling up. I mean, we're looking at the numbers now. The latest inventory numbers show that there are 5 months of inventory under construction right now. With the prices being what they are, I would kind of pause. I'd be like, well, why would we keep buying? We don't even really have the demand. It's a tricky spot for these home builders to be in too.
For sure it is. And if rates,
I mean, they started construction and they may be under contract, but that contract doesn't close unless they finish the house. And then the mortgage, the mortgage guarantor has to then, even if you got a low rate, like how long can you lock it in if the house isn't, finished? It's a chicken and egg problem there too. So I don't see that going away. I mean, prices aren't going to reduce overnight. This inflation is not going away overnight. Like when prices are high, it now takes demand destruction to get rid of that, right? So we've got supply destruction already happening. That's already a problem. And by the way, talking to a trucker friend of mine the other day that lives locally, he gets $1,000 to pick up a load, $900 for him to fill up his truck and diesel. Do you think that guy wants to work for $100 to drive 900 miles now?
No, for sure, no.
I mean, is your life at risk on a highway with crowded roads and hot potholes worth $100 now? No. And so, we're going to have continued supply issues in this country, and it's because of, again, policy and energy policy, along with monetary and fiscal policy. All these things matter to traders. So no matter what you say,
well, it matters to everybody.
I hate politics as much as the next guy, but it matters in what we do and how we analyze and how the market responds to those types of things. So it's very important.
Right on.
But so yeah, we're in a downtrend. Clearly, I mean, any monkey can see that we're in a downtrend since the first of the year, and we talked about this at the end of the year. Home Depot was the greatest short on the board. We talked about it. I mean, we were talking about it. All these stocks are going to run until the end of the year. They did that. Then they're going to sell off. They've done that. So yeah, let's get a little counter trend. Great, fantastic.
My point is, as we fractal out, when we talked about it yesterday with Berkshire Hathaway, crazy cheap. It depends on the fractal that you look at. Crazy cheap.
Yeah. What's your time frame?
What is your time frame? Crazy cheap.
Yeah.
Matt, here's this was shared by Pete Devine. And he's replying to Dave Collum, and I think that was Dave's share of a artery in a pan. Anyway, nation's fifth largest insurance company, Lincoln National, reported a 163% increase in death benefits paid out under its group life insurance policy in 2021. Insurance policy paid a little over $500 million in 19, $548 million in 2020, and a stunning $1.4 billion in 2021. Back to policy, Matt. Jab everybody, even if they're not at risk, via the numbers. Somebody's insuring all these people, and now it's playing out. I mean, again, this is playing out in real dollars. And if you're holding Lincoln National for the benefit of the, I'm sure they're paying a dividend, Matt. Let's look at
Lincoln National. Most insurance companies do. It's 4%. It's right around 4%. So it's not bad. But again, it peaked last fall, November of 2021, after dipping all the way down to 16 because everybody was going to die as soon as COVID happened. But here's the interesting thing: we are back below really where this thing traded, right? So we keep talking about COVID lows. We're below the COVID high, well below the COVID high, which is this is where we fell from, which was right around $60, and we're trading 48 right now. So we're down 12% from that, and now we're back into a real market, right? We had, like everything, we had the run up for a year and a half, and it's over, and now we're right-sided. But again, we could bounce here soon. We could bounce maybe 43 area if that holds this last little leg right here. As long as that holds, which is also kind of a high in this, that people will be looking at. So I would watch 43 to be your backstop right now. And then again, a bounce is overdue, and then we'll probably sell off again. I mean, it's just, that's what it looks like to me. And again, if you're paying out double, just that tweet that you talked about, Bob, they paid out double insurance policies in a year. Again, that trend, that seems interesting. If it happens more than 1 year and more people are making claims,
it becomes problematic for their bottom line.
It does. Well, then they got to revise their actuarial charts, and everything gets out of whack. Risk that they had taken on for those premiums is now not worth what they have to pay out. So that means now your insurance policies for your life insurance that you tried to get a couple weeks ago is going to be more expensive, because there's more risk for but it does. No, there's inflation in it. There's inflation.
Exactly.
There is inflation even in insurance policies, because now the risk is greater for them that they have to pay out.
No matter how much I weigh, it's still
no
going to
matter
be
how
higher,
much you weigh,
which I've been working on to a failing degree.
But my point is, inflation even comes into that, especially when you have a situation like this where more people are dying and nobody wants to address it yet. And eventually these guys, you can't tell me they're not talking about it in their life insurance board meetings. You cannot tell me they're not talking about it, because that's their business. If they don't understand the risk, how can they set premiums? Impossible. I mean, they're absolutely 100% talking about this, and every insurance company, whether it's life insurance or health insurance, is talking about this right now. And if you don't think that's going to affect the ultimate outcomes of our overall healthcare, again, inflation is everywhere right now, and it's affecting everybody, Bob.
Everybody, Bob. I like everybody, Bob. He's pretty fun. All right, Matt, what else do we got? Anything else that's jumping out at you?
Well, we wanted to talk, I think you wanted to talk a little bit about Alcoa, because that's always like the first earnings,
Well, Alcoa too, aluminum, or do you say aluminum? Because I did see some tweets too about copper, the commodity, and how it has fallen off the table
we can look at that too. Yeah.
Let's look at both of those. Let's look at the commodity.
So Alcoa usually kicks off the earnings
We don't
season.
see it. Bring it up.
I know. I'm getting it ready.
I'm sorry.
Alcoa typically starts out as the first, big name. And just so we're clear, the pre-COVID high, the last time we were this high on Alcoa, by the way, was back in 2018. And that high was, what was that? Right around $63. Okay, we dove all the way down here. We were diving before COVID. So it's strange to watch, like, because, the economy was kind of humping along here. Why was aluminum just going down, down, down? And then they have the pandemic. You go from 4 to 100, basically. So a 20 bagger, 476 to 98, 20 bagger. And now we're cut in half. So there's been some serious destruction because obviously the world knows that there's going to be demand destruction next, but we're just getting back into value, Bob. So again, we could bounce here. We're way oversold. Why wouldn't we bounce? What would be the reason? Maybe the earnings didn't appear to be as bad as they were. So a lot has happened. The earnings are coming up on July 15th. So that will be the first one. I think the big one still is going to be, July 26th. Mark that on your calendars. That's Apple. Again, people aren't going to be buying new iMacs and new, iPhones with the gas prices. Like, you're going to deal with the broken screen for another 6 months.
Hey, man, I saw yesterday somebody tweeted out the number of retail bankruptcies. Did you see that tweet?
I did not.
It was retail bankruptcies over the past several years. The average, first 6 months of the year. So through June, there's generally 12 to 15 retail companies that go bankrupt in the country. All right.
You're talking local hardware, whatever
it is. I really, but this year, amazingly, there's only been 4. And the whole gist of the thread was that look out, because we're going to revert to the mean on that yearly number. It's just going to all come in the second half of the year.
Right.
As demand gets destroyed.
And again, if you want to, here's the simple way to know when the recession, which hasn't even started, it probably has started 3 months ago, but the simple way for me and my money to really know when a bottom is in, tell me when gas is back to under $2 a gallon, because that will be when the demand destruction has taken care of the price destruction that is happening right now with inflation. So until that happens, we're nowhere near a bottom. You cannot bottom in an economy with gas at $7 a gallon. I'm sorry, you can't. Period.
Say that one more time for our
You cannot bottom a stock market with gas at 7% and rates, for that matter, at 6.4.
Right on.
Good luck. Just come at me, because that argument makes no sense. Now, we talked a little bit about copper. Dr. Copper, always an indicator of the overall economy, right? People say, so goes copper, so goes the rest of the economy. That's always been an axiom from Wall Street. It's usually pretty accurate. And we ticked over $5 there early this quarter. And look at this destruction since, Bob. I mean, we're down to 365, 366. And we're in this hole. Why on earth wouldn't we go down here to 3.2? And the COVID low was $2. So again, this is, this price is still, and we broke this bracket, by the way, and this bracket was a good year in the making. So the $5 to $4, let's just call it $4 to $5 is now going to be your ceiling
$4 to $3, right on.
Right.
There'll be an argument at that high end of the profile, and we'll see where it takes us.
If you can if you've missed the move so far from $5 down here, probably not a good time to sell, right? If you have not been short, do not sell. And if it goes straight down, well, you can come at me there for that. But I've been short. Let's say I've been short from 450. It's a lot easier to say that, right? If you're not involved. But this is where you wanted to get short when it bounced off the 4 back to here, 440, 450. Now you want to get short if it gets back to $4. And yes, Bob, it will trade to 3. This is the next level. It's right here, right down to 303. And this bracket being $1, and the bracket below, you use the brackets every day, whether it's short term, long term. They do work out nicely. I'm just saying, if you're not short, wait for a bounce. Wait for a bounce to get back in it. It's not too late to be on the right side of this trade. There's plenty of move down still plenty of move.
And if you've been procrastinating at home on stripping that copper wire because you thought you were going to get $6 or $8 for it, maybe you should start vigorously stripping the wire and getting it to the man.
Right.
You know who the man is, man, don't you?
The Wizard of Oz again? We're talking the Wizard of Oz again?
No, the man, the recycling man that you get money from.
Yeah. The recycling.
Give me the scrap. I know some scrap people.
It's interesting because the last couple of days that we've also seen a huge bounce in housing stocks again, because apparently 6.5% mortgages and $7 oil is good for housing now. So again, use your common sense. But you want bounces if you believe in the right side of the story. That's as simple as that. Here's the HGX. It bottomed down here at 332. It's up 10% since then this week. Let's look at the short-term chart before we fractal out. 332, and today we're kind of rolling over here as we come back again to these levels where we broke down from. So this is just what I was talking about in copper. Why wouldn't copper rally to a level like this and then roll over again? That was 400 or so on copper. You're seeing the same thing happening on housing. So housing just went from 332 to 360. What changed? Nothing. The interest rates had fallen off, as we talked about a little bit. So that's the reason. That's the reason why. Here, and we'll just bring up the futures on the 10-year just so people can see this. This bottomed also, by the way. This bottomed this week so far down here at right around 3. So we broke through. Remember, 320 was the number, Bob.
Mm-hmm.
Yeah. So we broke out over that, went all the way up here to 350, stopped, and I said they'd probably come back to 3 before they take off again. And maybe even further, maybe even down here to 285. So
I think that makes more sense. Go test the meat of that profile.
Yeah. And that will suck more people into the housing. Oh, housing's bottoming again. Guess what? Housing selling season is already over. Like, it's done. It's just, once July 4th comes, like, people aren't moving. They're not going to find a house in a new school now with a month left. They got to start back in school. So the housing season is pretty much over. Yeah, wealthy buyers can buy at any price, so that's not going to change, right? And so you're still seeing high-end transactions. And matter of fact, I was looking at a house here the other day that went on the market, and I said to Justin, I said, who's buying this $2.5 million listing in Northwest Crossing? It was 2,800 square feet. Nice house, very well done. A builder built it, puts it for sale. He probably moved in 2 years ago, and he probably built it all in for $600,000-700 grand. If I were him, I'd sell it too. And he put a list on at 2.5. It's sold in 2 days. So that's my point. High end is still transacting because people with money don't feel the inflation that you and I feel at the pump, because we're not buying a $2.5 million house. I wouldn't buy it even if I wanted to at this market.
Right on.
But that's the way I operate. I'm always looking for the value. And why wouldn't you wait until people are puking in the streets? Why wouldn't you?
Blood in the streets, man.
For a big purchase like a house, why wouldn't you wait? You do not listen. Housing is nothing but function. Stop thinking that every house is going to double, because that's what gets you into trouble. Buy a house because you like it and you can afford it, and it doesn't affect the inflation at the pump doesn't affect your cause or your reason to live in that house, right? That's it.
All right, Matt, that's what we got. Please visit us at marketvitals.io. Please share, retweet, plagiarize if you like the broadcast. Thank you very much. Did we have Lee in today? Was Lee in?
Yeah, Lee was in here.
Lee, awful quiet, Lee. Awful quiet. Awful quiet today from Lee.
He must have ate some meat last night.
I think he revisited a Grateful Dead show from.
I think he had a little meat last night, and that kind of bugged him.
That's not a chance. No chance there. All right, Matt. That's all we got. Hey, listen, Matt. Before we go, I tried this last night, and it was just ridiculous. The habanero ketchup, Matt, available in the bundle at Amazon that we've talked about from Manja. The bacon habanero ketchup, dude, I mixed it with I made my own Thousand Island. I know you, like me, grew up in a household where Thousand Island dressing was ketchup and mayonnaise. That's it. That's how you make Thousand Island.
And relish.
A little bit of, we didn't even go very much relish in the
Little
Thousand
pickle
Island.
relish makes it.
I'm just telling you right now, you make the Thousand Island dressing with the bacon habanero ketchup, forget about it. It's a whole different level of.
I mean,
my
growing
God.
up, my favorite salad dressing was Thousand Island. It's still the best. And it's keto because it's all mayonnaise.
Mayo, real mayo too. None of this Miracle Whip shit that's good. That'll,
I like Miracle Whip was good stuff though. It was the vinegar. It was the vinegary taste. I think is what it was. It was the vinegar, right? Isn't that what it is? It kind of tastes like.
It was the
like
vinegar.
That's what you want to make. You want to make coleslaw with Miracle Whip.
Miracle Whip. It's the vinegar and the hardening of the arteries that is the best part of it.
But it's fat. That's good for you, Bob.
Yeah,
That's
no, not grain or seed oil fat is no fucking good. Crisco, dude, you know that Crisco, they developed it for lamp oil, and then when petroleum got distilled, and they didn't need a substitute for tallow, which was beef fat, right? That they used in lamp oil. So they did all this work making Crisco to replace tallow, rendered animal fat for lamp oil. Well, so they were making it for lamp oil, and then they spent all the money on it, and they're like, well, maybe we can feed it maybe we can cook with it. Let's go. Crisco for everyone.
Crisco for everybody. And, you might as well add in some Spam and some Twinkies. And basically, you can live forever. You can live forever with those.
That's coming next week on our health tip corner of the show. Health tip corner. All right, Matt, thank you so much. Thank you, Lee.
Bobby, have a great weekend, my friend.